You know, if the whole world of investing has ever felt, I don't know, a little too complicated, maybe even a bit intimidating, then you are in exactly the right place. Today, we're going to cut right through all that noise and explore a path to building wealth that is, believe it or not, refreshingly simple. So let's dive right in. For so many of us, when you hear the word investing, you immediately picture this, right? A chaotic trading floor. Basically, a giant high-stakes casino where you're always just one wrong move away from losing everything. And that leads to this really common, totally understandable fear, doesn't it? Is this whole thing just a rigged game for Wall Street insiders? Something the rest of us just can't possibly win? It's that exact feeling that keeps so many people on the sidelines, just too afraid to even get started. Well, there's a reason it feels that way. And the truth is, there's an entire industry of so-called finance gurus and experts who actually benefit from making investing seem impossibly complex. You know, their whole business model depends on you believing that you need them to navigate all the chaos. And this is pretty much their playbook. They'll talk your ear off about their super sophisticated AI models, about constant rapid-fire trading, making these big, high-risk bets, and of course, they always have their exclusive secrets. It's all designed to make you feel like you're missing out on something huge if you don't play their game, by their rules. But here's the twist. What if that entire complicated, stressful approach is just a myth? What if the best way to move forward is actually simple?
I mean, this is the question that really changes everything. What if the path to long-term financial success wasn't hidden behind some expensive paywall or buried in a complex algorithm? What if it was available to absolutely everyone, just sitting there right out in the open?
And when you put the two approaches side by side, the difference is it's night and day. On one hand, you've got the guru way. Complex, loaded with high fees, constant trading, and a ton of risk. And on the other, you have the BOGO way. Simple principles, rock-bottom fees, a patient buy-and-hold strategy, and a long track record of proven results. The contrast is just stunning. So, let's officially meet this incredibly elegant solution. It's called the Bogle method, and it's named after the legendary founder of Vanguard, John C. Bogle. It's a philosophy that basically turns the complexity of Wall Street completely on its head.
And here it is, the secret recipe in its entirety. Are you ready for this? It's just 2 steps. Step 1, invest in a total market index fund. Step 2, add some bonds for a little stability. That is the core of the strategy. No, I'm serious. That's it.
Okay, so what on earth is a total market index fund? Well, think about it like this. Instead of trying to guess which single store in your town is going to be the most successful, you just buy a tiny little ownership stake in every single store. That's what this fund does for the stock market. It's designed to track a whole market index, which is really just a big list of stocks, and that gives you instant diversification. And to make this super concrete, a really popular, well-known example of this is a fund with the ticker symbol VTI. That's the Vanguard Total Stock Market Index Fund. It's a perfect real-world example of this whole principle in action. All right, so I know what you might be thinking. This all sounds great. Maybe even a little too simple to be true, right? So the obvious question is, does this thing actually work? Well, let's look at the proof. See, the answer isn't in someone's opinion or a wild forecast. It's right there in decades of real-world results. When we actually look back at the historical performance, the numbers tell a story that is incredibly clear and super compelling. And here is the absolute punchline. Year after year, steady after steady, shows that something like 90% of professional, active fund managers, the people paid big bucks to beat the market, fail to do it. This dead simple, low-cost approach of just buying the whole market has historically outperformed the vast majority of the pros. And you can see it right here. Over the long haul, the patient, simple approach of index fund investing has just delivered better results than the frantic, high-cost scramble of most day traders. It turns out that by trying to do less, you often end up with way more. So here's the most important thing to get from all of this. In investing, complexity and cost are the biggest enemies of your returns. I mean, a seemingly small 1% fee can literally eat up nearly a third of your portfolio's value over a few decades. Simplicity isn't just easier, it is flat out more effective.
You know, once you really understand this philosophy, it's incredibly empowering. It means that building wealth isn't some secret code you have to crack. It's a disciplined process that literally anyone can follow. This one idea just reframes everything. The goal isn't to be smarter than everybody else or to perfectly time the market's every little wiggle. Nope.
The real goal is so much simpler. It's to become an owner of great businesses and just participate in the overall growth of the economy over time.
So, what do you really need to take away from this? Let's just boil it down. Number 1, ignore all the noise from the financial gurus. 2, embrace the incredible power of simplicity. 3, make low-fee total market index funds the core of your portfolio. And finally, number 4, be patient and play the long game.
I want to leave you with this final thought. For decades, investors have obsessed over this idea of beating the market. But this whole philosophy invites a brand new question. What if you could achieve all your financial goals by simply capturing the return of the entire market, guaranteed at a super low cost? What if the goal was never to beat it, but simply